It's the end of the day with Ray. Hello, my friends. Well, it's time for Konica's year-end financial episode. Folks, their year ended in March of 2022. I got the numbers in. I dissected them. I went through the financials. I want to share today's presentation. We got the Sharp Interactive board working. I got my magic pen in my hand. I will tell you this, the numbers aren't good. For those of you that can't stick around, it was over $170 million in the hole. You know, last 2 years alone, $300 million loss. Things need to change over there at Konica. There's no doubt about it. So without any further ado, let's jump on the Sharp Interactive board and get to it. So the first thing I want to talk about is why you need to make sure as an OEM, actually any business, that you actually have profit. And that you're doing everything you can to ensure that you have good operating profit. You know why? Well, because you get in trouble sometimes with hacks and circumstances around the globe. And right now we're in a pretty unpredictable place. I mean, the folks, even the yen itself, it's its weakest point in like almost 30 years, which is going to cause more problems to operating profit for Japanese companies. But here's a scenario where COVID delayed the patching of some vulnerability on Konica Minolta printers. I mean, you know, places were shut down. This particular vulnerability needed a human intervention at the machine. And anyway, there's an article out there. There's an update on it. But see, this kind of shit happens, as they say. And when you don't have the right amount of money in the coffers, how many things can happen before you get in trouble? And Konica's had their fair share of just bad things happen. I mean, it's not their fault, right, that the toner thing burnt down. I mean, that was a problem. But you see, this is the point. This is the point with running a tight ship, as they say. But let's just jump into it, you know, and I went ahead and I got their presentation. I went ahead and added some slides every now and then because I wanted to make sure that people just didn't think everything was, you know, people sitting in this beautiful conference room with a marble floor. I wanted to know there's cracks in the marble and it was a big loss. I added that to the visual. And, you know, maybe I'm being a little bit of abrasive for some people, but at the end of the day, if we don't pay attention and we don't consider these losses like cracks in our foundation, how are we going to move ourselves forward? Because, folks, when I'm reading the aspirations of Konica going forward, when I'm reading the excuses of why they lost money, it doesn't seem like, I'm not real convinced that they have the ability to be an ongoing concern. That's just me talking, okay? But I don't think I'm the only one that thinks this way. So let's just jump right into it. Someone did email me this now. Folks, I can't help what the fans send me. But somebody sent me this bankruptcy billboard. I guess it's out of Ramsey here. It says www.nooneneedsyou.com. Call us. Kind of interesting. They do planned obsolescence. Maybe if you're a company with an obsolete product and you can't pivot or transition, this is the law firm for you. Anyway, that kind of snuck into my presentation. But, you know, sometimes the fans send me stuff because I am the most watched, you know, the most watched show in the whole entire document imaging channel, right? Anyway, thanks to whoever sent that in. We got it up there for you. But, folks, let's just dig into the numbers here. They did $7 billion. $7 billion in revenue, total revenue. The operating profit was $173 million loss. $173 million loss. You put that together with their year ending for 2020, it's a total of $300 million lost last 2 years for Konica. $300 million. Let me say that again. $300 million. This is unsustainable. Things have to change. Let's look at this from our perspective. Those friends of mine that sell supply and service print equipment. Digital Workplace with the professional print, both of those entities, combined revenue of $5.1 billion. Big chunk of Konica's revenue, right? Big chunk of it. $5.1 billion in revenue. The operating profit for both of those units together was negative $40 million. Negative $40 million. When you put it with last year, they're a negative of $122 million loss 2 years. So professional print, digital workplace, operating profit last 2 years, $122 million loss. Cracks in the marble foundation. Loss. Have to make serious changes, right? Have to make serious changes. This can't continue. Well, you know what I do find interesting, and maybe Konica could put it in the comments because I'd love to know what this is in this category. But they have this other thing, corporate, etc. That was $118 million loss, like 2 years, their last 2 years in a row, which is $236 million. kind of unexplained loss. I don't really know what those dollars are attributed to. That'd be interesting to know exactly where that money was lost, right? But in our space, I mean, I'm almost thinking sometimes maybe they take some of the digital workplace and professional print cost and they shovel them down here to corporate, etc., and increase the loss there so it doesn't look so bad up here maybe. I mean, I'm just asking the question because either way, 122 million loss over 2 years is not very exciting. Let's look at some of the reasons they're talking about. I call it the blame game at this point, but I stuck this in here so this slide did come out of their presentation, but I went ahead and added the blame, the supply chain, because it seems to be what everybody's doing these days. But we're going to go for their achievements. Let's talk about some of their achievements that they say. Achieved increases in revenue and profits in line with initial targets in the industry business, driven by sensing and materials and components. Folks, this industry business, that's where their lens business is. That if it wasn't for that, this company would literally be, well, they'd have to go to, well, hang on a second really quick. They'd have to go here. Oh, is it here? Yeah, they'd have to go there. Seriously. I mean, the industry business is what's really keeping, it just makes money. I keep saying, maybe it's sarcastic, joking around, but maybe those industry people need to run this whole company. But, industrial print and healthcare also achieved increases in revenue and profits in line with initial targets. So I don't know what their initial targets were because it's like 0.5% operating profit in the professional print. It's not enough if somebody sneezes and something breaks. They don't have enough money to fix it. I mean, so I think they need to, maybe they raise their aspirations there. But let's just go to some things they didn't achieve. And I want to talk about what I see missing here. Supply shortages. So the first thing that I would say, if you really wanted to be honest with the shareholders, when it says things we did not achieve, the very first thing, we didn't achieve operating profit. And we're not going to blame it on impairment law. We sucked at delivering the operating profit. Supply shortages, mainly in office and production print, owing to tight semiconductor supply, prolonged logistics. Folks, all these things aren't going to change over the next 6 months, right? I mean, they're almost into their end of their first quarter of the new year. And we haven't seen a whole lot of changes in supply chain and all this, right? And it just seems to be like they just don't get it for some reason. In DWDX Solutions, sales related to office print decreased owing to supply shortages, and there were supply shortages for prolonged. Folks, at the end of the day, really? Why didn't you really achieve things? Because you didn't get rid of your direct operations, which you probably should have, and got rid of those high costs to run them? Because, folks, I don't get it. We're just losing way too much money over here. Let's go to the next slide. So, every year you got to put out your new projections, right? Let me just talk about the last couple of years. Folks, they're off $452 million from their projection. $452 million off this year. They lost $173 million this year. That's a lot of money. I mean, but it's a miss of $452 million. So when you start talking about your aspirations and your forecast, it's hard for anybody to take it serious because you're not talking about doing anything different than you were talking about when you had the last disaster. I mean, the problems are all about supply chain. We didn't achieve quite the level we thought. Where's the inspiration to get the investor to say, what the hell's going to happen next year? Because I'm telling you right now, I think they'd be like shaking their head. So let me just talk about some of this. They talk about their performance factors. They do mention that they had this one-time factor of a negative 20 billion yen as an impairment loss, but I'm going to ask them, where's the second factor? Are we going to have the second factor in this fiscal year? Because are you going to go ahead and do an impairment charge against All Covered as an example? All Covered and those 17 acquisitions you made up underneath All Covered? Because you never once, and I've been screaming at you for a long time now, share any of the successes with All Covered with the world on your financials. And to me, that means it's probably not that successful. Otherwise, you'd be bragging about this thing to no end. And I'm not talking about buying the awards and throwing those on your website. I'm talking about actual details of how you're making money. in IT services when the whole world of print is screwed up? How has that helped you change the game and drive your revenue numbers? So I'm guessing that maybe this year, maybe next year, there'll be another impairment charge and it'll go against all the stuff it all covered. Just like our friends at Rico did with Mindshift. OEMs going out there, buying up these investments, and they don't know how to transition those investments into a deliverable that makes money. Because if they did, they'd be bragging about it. And folks, you know, if you're in our industry loves to brag. Konica's the biggest bragger of all the OEMs. That's just my opinion, but I'm not the only one that has it. They can't wait to get the award. They can't wait to have the press release. The press release. Got to have a press release. Like I say, when you do a press release continuously about nothing, that's just to distract everybody from the non-action of the last press release you did. But folks, here's another problem coming to them. The yen. I mean, the yen is just gone. It's gone off the chart, folks. It was just flat for like 30 years. It's 129.26. This is going to hurt them. This is going to be fantastic for foreign buyers that want to buy Japanese firms, though. It's going to be fantastic for Bain Capital to gobble up Toshiba. So, boy, they're going to be pushing this issue big time because there's no better time to do that than right now. But ladies and gentlemen, I want to end today's episode, and I'm hoping that Konica realizes that, yeah, this could have been a little bit tough, but you're the worst one in the group, okay? You're the worst one in the group that gets the most press out there, and at the end of the day, there has to be a turnaround over there, right? We all know it has to be a turnaround. And so maybe if we stop thinking about things through rose-colored glasses all the time and we actually paid attention to the threats and the challenges, we'd shake some shit up, as they say. Because, folks, here's the reality. Race cars are cool, but customers need toner. And that's how I'm going to end today's episode, because everybody watching me knows this. Status quo is the killer of all that'll be invented. Don't get stuck in status quo, and I'll see you all tomorrow.